Well, hello there, Mavericks. It is May 16th. This is Rob Reinhold, and it is the Currency Recap. Let's break down the day. And look, we've been very clear over the last week or two, it's not a great trading environment. So let's take a look at the breakdown here today. So in the news today, we had overall weak equity markets. If we jump over here to the numbers, we can see that the S&P lost 0.2%. Now, that is what it ended the day at. But for most of the day, it was down 0.2%. And then at the very, very end of the day, we got this big kind of flush. Most of the markets were flat. The NASDAQ was up all day long and actually only closed down 0.1%. But the world index closed down 0.86. Gold was down big. Oil was down big. Crypto actually had a decent day, but we'll take a look at that. That was mostly Litecoin, had a really good day. So what we saw today was weakness in commodities and equities, but we saw strength in large cap tech. We had Google up 2.5%. We had Amazon up 2%. We had Microsoft up almost 1%. These large cap tech stocks are trying to hold everything up. Now, we talked about how oil had a nasty day today. It was announced this morning that the U.S. was going to start to refill the Strategic Petroleum Reserve, which was big news, and oil fell on it, and the energy sector fell on it. Whenever something goes down on good news, it is a warning sign that no one cares anymore, it's going lower. And then last, this is going to be a headline for the next 2 to 3 weeks. We are now in the debt ceiling talks. I remember this in 2011. And everyone thought they'd make a deal, and it turned out they didn't make a deal. Then the market panicked. And then the market panicking forced the politicians to finally make a deal and get us out of it. So you can see what happened in 2011. We're tracking pretty closely to where the market was in 2011 going into those reports. So we'll see what happens. My guess is, like always, the politicians will blow it. They'll be pushed past the limit. The market's going to react terribly, and then they're going to be forced into making a compromise that ultimately the market likes in the end. We'll see what happens. Let's look at these charts here. S&P smack dab in the middle of its range. We've been calling for a flat range-bound equity market. Here we have the 10-year government bond, smack dab in the middle of its range, closer to the higher side. But look, nothing's going anywhere. Even when we take a look at crypto, we had that big fall last week, and okay, it's recovering a little bit. But look where we are. We're back up to the 20-period moving average, now back up to the 50. We're still in more bearish territory than bullish territory, but mostly sideways here. Take a look at the performance of what happened today. We can see that for the most part, cryptos were flat except for Litecoin. Take out Litecoin and we have flat cryptos across the board. We come over here to the foreign currencies. You erase the yen and the Aussie, and you can see everything was flat as well. Now, we did call for short Aussie and short yen this week, and you can see those were good calls, but look, there's nothing really strong against it. So it's really a one-sided trade where you're saying, I think Aussie's going to be weak. You're not saying that I think it's going to be really strong, because right now it just isn't. So when we take a look at where we are, we're at a good solid 0 to plus 0.5. I mean, really, we are just right in the middle of going nowhere. We have to recognize that there are times in the markets where there's high energy and there's times where there's lower energy. We are in a low energy time. That means you trade less. Remember, trade the market in front of you. The market in front of us right now is less. So let's just simply reflect that. Okay, so we got some news this morning claiming count change out of the UK, worse than expected. Canadian CPI, you know what, the month-over-month number was a little hot. The year-over-year number was a little cool. It was pretty much flat across the boards. And then U.S. retail sales missed quite a bit. For the rest of the week, I really think the only thing of any importance is going to be on Wednesday, the Aussie employment report. And then on Friday, Chairman Powell. And I think that Friday Chairman Powell speech is the best trading event of the entire week on Friday. So let's take a look at the currencies and let's see if we can find anything for the next 24 hours. I'm going to be pretty clear here. The market's not great, so trading less is a good idea. Let's start out with Bitcoin here. So I'm on a 4-hour chart. I've got our velocity scores in and EMA. I've got parabolic SAR and RSI. And look where we are. If you take a look at right here, EMA is flat. Parabolic SARs are flat. RSI, flat. What is that telling us? Surprise, it's flat. There is no reason at all to click a button when something doesn't have any velocity. We come over here to Bitcoin Cash. Okay, RSI, pretty flat. It's tilting up a little bit. Parabolic SARs, flat. EMA, flat, maybe turning up, but look, there's nothing going on here. Ethereum, even flatter. It was surprising that you could actually get flatter than what we've just seen, but boy, that is as flat as can be. And we got Litecoin, the only thing showing some momentum right now. So look, if you had to buy a cryptocurrency and you had to buy it right now, you should buy Litecoin. The rest aren't going anywhere. At least this one's going somewhere. Now, granted, it's already had a big run. It's already had a $10 run. I still want to buy it here. I'd wait for a pullback or a base. But this is the only one that's currently has a supply and demand imbalance. If we jump over here to our Forex, foreign currencies here, I think the picture is a little bit better. There's more going on over here than there is in cryptos. This is the dollar. Now, we talked about this big turn in the dollar that we saw last week. We pulled back, and look at this. This is a nice little bull pullback here. Ultimately, you do want to be long dollar, but you cannot ignore that there is some pretty serious overhead resistance up here. If you want to be long dollar, I think you've got to be long dollar over the shorter term, but I think you can be long dollar here. Everything is showing more momentum to the upside. EMA is turning up, parabolic SAR looks nice, RSI is at least up above 60, flattening out right here, but look, that has some decent momentum behind it. We come over here to the yen. Now, if we take a look at the yen over the last 2 weeks, it's been basically sideways. It's been basically right in this area, in this range. In the short term, we have EMA tilting down. We have RSI. Boy, that's pretty flat. We got parabolic SARs coming down. Look, there's still more momentum to the downside than the upside. That being said, look where we are in the range. I don't want to be selling yen down here where it typically bounces. I'm not interested. Now, look, if yen can rally, if we can get a bear rally, come up here, turn down, I'm all about shorting yen. But until then, I'm just not seeing it. Look at euro. Euro is as flat can be. RSI at 50, EMA going nowhere, parabolic SARs. So whenever you see flat, just flip. Just flip to the next one. Don't try to figure it out. It's telling you I'm not going anywhere. Here's Swiss franc. At the moment, Swiss franc is flat. So this has been over the last 4 days here. You can see nothing's going on. If you want to put out some alerts, say, hey, look, if the Swiss franc can actually show me it can break up above that, I'll play. But until then, don't trade in here. You only get chopped up. Your orders get chopped up. Your stops get triggered. It's terrible. Just stay out. Wait for a better opportunity. Pound was another one of the currencies we actually liked for the week, but you could see that long lower upper shadows, any run is sold off, any sell-off is bought. I have no desire. I mean, take a look at these last 4 candles. I have no desire to put money on the line when all it does is run up, fall apart, and then bounce. Look, that's not the kind of trading I do. I'm looking for something that's actually going somewhere. Here we have a currency that's actually going somewhere. We have the CAD. The CAD broke out of this overhead resistance, came up, hit its head up against this next resistance, but we're having a nice pullback here. Look, I do like CAD here. I'm just waiting for it to turn. We've got 2 red candles. We possibly get a green. Another green candle. I think you could look at a CAD long. That being said, CAD and dollar right now are highly correlated. I like dollar better than CAD. Aussie was my favorite short for the week, and you can see lots of weakness in the short term. Okay, we're heading down. We're at a level of support, so I have to admit that at this point, we've had 20 hours of selling. We're likely going to have a bounce. I would love to sell this bounce. So that bounce probably won't happen until 12, 24, maybe 36 hours before it develops enough to where I can sell it on the way down. So right here, I don't like Aussie at the moment. Let's finish this up with Kiwi, and Kiwi is telling you, okay, I had a big fall, I rallied back up, and now I don't know what I want to do. Kiwi doesn't know, I don't know, you don't know, so just put it on the shelf. So ultimately, this is kind of where we stand here. The only thing that's really moving right now is Litecoin. But look, it just had a 12% run. I don't buy things after it has a 12% run. The only other thing I can really look at is CAD and dollar. And when you take a look at what they're weak against, it should be Aussie and yen. But look, we only like to take trades when they're +2 or +3 or -2 or -3. So this is really telling you to not trade. That's exactly what this is telling you. There's only one currency cross that I want to take a look at. Actually, there's two. Let's take a look at Aussie dollar and dollar yen. All right, dollar yen. Here we are, dollar yen 4-hour chart. You can see that we've got some overhead resistance, but it's not all the way up until 137.70. That's really our next resistance, and we've been stair-stepping up. We've been running up, basing, breaking out, having a little either pullback or base here. Look, I like this trade. Look, it's not a great trade. This is an okay trade. And if you say, Rob, I want to do better trades than this, I get it. Look, I'm not going to be taking this trade. I'm just talking so we can talk about some trading things that make sense for anyone who is just bound and determined to click a button. I am not clicking a button because I don't think the whole market has enough energy in it to justify it. But if you are going to trade, this is where you should be looking. Dollar yen off of a pullback. We should get a pullback right into this 136.13, 136.10 area. So about 20 more pips to the downside. If we start to get some nice bullish action there, okay, you could take that trade. I don't think it's a great trade, but it could be a decent trade. The other trade is Aussie dollar. Aussie dollar short. So here we are, Aussie dollar short. We had a nice rally. These are the rallies you want to sell. This is what you want to sell up here, 67 down to 66.50. I would be much happier to sell a rally on Aussie dollar than sell it here. We've already spent some energy. In a low energy environment, we already spent some energy. I'm guessing it's going to bounce here. If you want to look for a better trade, I think a breakdown of this 66.40 area is a much better place to be. And then all of a sudden now you've got a target that's about 60 pips away. That's about 1%. I'll take that trade, but I don't like this trade here whatsoever. So really, the only thing I think is worth looking at over the next 24 hours is dollar yen. However, we do have Aussie employment report coming up tomorrow night. I think that could put the Aussie back into play. So as I said, we have lower volatility, which means you trade less, not more. Look for reasons not to trade, not reasons to trade. Look for reasons not to trade. Say, hey, I'm not going to trade until Friday. I'm not going to trade until this happens. Put up some barriers to where in your brain you're saying, okay, I'm not going to trade until it gets better. Put that in your mind and that'll keep you from clicking buttons just out of boredom. If you are going to make a trade, hyper-focused on velocity. You have to get the things that are moving in a market like this. And they will happen. And if you get it right, those are the only decent trades, because as you saw, if you were trading Euro Swiss franc, Euro pound, Euro Kiwi, nothing happened. They're dead. So you've got to focus on where the velocity is at the moment. That is the currency recap. Thanks for joining me.